Welcome to TradeTheNBI.com. This is John. This report is for the 6th of October. Well, yesterday we saw a pretty big rise at the beginning of the day, and it continued throughout most of it until towards the end, and then the selling began. And once that started, mostly related to the fact that the NBI White is still leading above, we had the pop-up of Magenta, which promoted a little bit of a positive move, but as the new day started, we could see that significantly continuing that sell. And we had the ranges, and we were pointing them out on our intraday charts on the Skype chat. We've had short-term buyers leading the way, but now with the expectation is that the only way you were going to see a significant move up was the continuation of orange DOC moving lower, and potentially we're starting to see a pickup. Now that can change obviously intraday, but that's promoted most of the weakness going through, which is just a continuation of the same issues that we've been talking about, where we've seen oil rising, and this is where you're going to have that break between the acceleration of inflated prices versus the reality that it flips very quickly when you recognize that there'll be a significant economic slowdown. So that boost in value based solely on the expectation of inflation being wiped out. And of course, you know, some of this was what they thought was the euphoria on the potential of infrastructure, but at the end it was really just our typical time where funds get their new money and start buying when they think they've got discount until things go the other way. But NASDAQ, you can see clearly with that white NBI spike, much more under pressure than the S&P in real terms. This is that decoupling we were talking about. And it's a problem for the Fed because it's a representation of interest rates rising despite the Fed not raising regular rates. So it's a fundamental break between the Fed fake economy versus what really is happening on the ground. And that decoupling is a problem for the Fed, and we haven't heard an answer from them. Like we've talked about, the Eurozone just really in a horrible condition, and that money fleeing is searching for higher yield, and some of that's going to go into crypto as well as having to fund positions in the U.S. markets, but still there's no growth prospects at all in the Eurozone relative to America. And this is the biggest issue right here, and something we've talked about, that continued climb in oil. Now it takes a little bit of time before it gets there, but this is what the market is reading, and what will happen is that you'll get a significant, literal break in the economy as people shy away from doing things based on gas prices and the potential of escalating costs, because this will reverberate throughout all price structures. From a Bitcoin standpoint, we can see that it's been in this major bullish setup here with the NBI White below, just finally now breaking down just a bit right here. All of this taking place under positive extremes, so it's all going to fill back at some point back down to that 43 range. So that's just a matter of as that takes place, when it happens. From an intraday chart, you can see this was that early rise. This happens to be the NBI pin bar, and again, like I was mentioning, it recognizes the dots, but having to adjust the buy configurations after those dots set up in order to pull it more towards the accurate convention. And what happened was we ended up with the NBI spikes, and that was pretty decent up there around the 43.50 range, and kept moving slightly divergent, but we kept ending up with those spikes. So it was just a matter of waiting out until the eventuality of this kind of breakdown, where you get the orange as well as magenta under yellow, and then the NBI dips below red, moves back above, and that becomes secondary signal. Once that started, there was no end to it. And we talked about this also in the chat. We had before that 4307, and there was really nothing in between 4307 and moving up to the 43 level. And that's exactly what price did. And then it supported off there, and until it got to that point where it broke below, and like I said, there was nothing really below that, I added in this 43.24, which was another positive extreme that was part of the move upward. And pre-market filled back through that and went right back to the 43.07. And once that broke down, you had plenty of extra supply available to that. From a 50K standpoint, we can take a look at it. So we had the NBI spike right here, but it was under magenta over yellow, and that pretty much stayed that way until late in the session. Got the sell signal, and of course the longs took out of that, and then began the short setup within there, and boom, that retraced towards the 0%. Is exactly what that was calling for, and so performing exactly as expected. I have been doing some adjustments to the inputs that we have within these to finalize some of the final setups, which I will be sending out so that you can see exactly what those input values are, and actually I can show you the results of those. This is what the 50K, with the finalization of some of the minor optimizations, which are just adjustments on pretty much how many bars before or after signaling takes place before new entry, as well as some of the baseline values above the white for NBI, those kinds of things. But you can see the numbers quite impressive here. Moves to 56% win rate on the long side, 51 on the short side. 3 profit factor for long side trades currently in that short that we can see on the edge of the screen here after it closed out. From a periodic return standpoint, positive in every month, and from a graph view you can see excellent equity line within that. And then we still haven't reached the most optimal configuration as far as earlier entries on the pivots above that 23% line. Does produce a RINA, which is amount of time in the market versus drawdowns. 363 is pretty darn respectable, and in the market 74% of the time, which means we're utilizing most of the market activity. Flipping back to where the pink bar is. And so once some of those additional adjustments are made, we'll probably end up with a little bit earlier interest. It probably won't make a whole lot of difference, because like you can see, even though it entered over here, it was from where the signal typically would be on this configuration, you're not probably going to get too many points, but it may just affect a few of them where added 4 or 5 extra points here and there on a 50K chart. Not as significant when we're talking about that, and then some of the exits will probably be adjusted a little bit higher up as well, so that'll add to it. But at the end of the day, we're looking for the predominance of reliable and repeated signals, and we're over that 50% threshold. It's just a huge improvement, because the best that the Opus T used to produce was in the mid-40s and still produced decent profit factors, but this just really escalates it utilizing the dots in this configuration. So I think from that standpoint, very exciting as far as what our capabilities would be, and you can see that capturing each of those dots, the colors pretty consistent within that, and then when there's the gap of the white, but of the yellow dots, and it begins from there. And I think that that's going to really give the best capture of the market. Certainly going to maintain its volatility. We've already seen a few days of outside standard deviations from moves, and when that starts to happen, you get a lot of I don't want to call it freak out moments, but at least you get some alterations in how traders perceive things. And it's that fine line when that perception goes from the Fed is going to backstop everything to maybe not, and or maybe they don't have control over that things start to escalate quickly. And there's plenty of room lower before things are even problematic, because this still isn't that significant a move overall. As always, though, I will continue to update you on the Skype chat. Trade well, and we'll talk to you later.